Before we get started, I want to warn you that the volume may need to be adjusted between the audio that you're listening to right now and then when we have Mark Moss video on, it's going to be a little bit louder. So you might need to turn it up right now to hear this presentation, and then once the video comes on later in this video, you'll need to perhaps turn your volume down. Just be aware of that. Thanks a lot. Welcome to American Northwest Magazine. I'm Danny. So, about a year ago, BlackRock declares, let's see, this is October 7, 2024, so no, not quite a year ago. BlackRock declares Bitcoin the new gold alternative. Here's why. That's not what this video is about. This video is about the fact that most Americans and Canadians don't understand how mainstream Bitcoin is already, and that they need to have it in their portfolios. We are not financial advisors, but we're going to say what we're doing. And what we are doing is having at least 30% of our portfolio in Bitcoin assets, such as the ETF available in the US and Canada, or I should say on Coinbase, which is the safest exchange to own Bitcoin, and then move it off the exchange and put it onto a hardware wallet. There's plenty of YouTube videos out there to explain how to do this. So diversify your Bitcoin holdings by having some in an ETF, having some in the exchange like Coinbase, even Gemini. They're both ordained by the U.S. government through the ETF system. The SEC required them to have required the financial institutions to have a custodian, such as Coinbase or Gemini, and those are the only two that I know of that became custodians, or the financial institutions became self-custodians. I think like Fidelity perhaps, but anyway, there's 9 ETFs in the US and at least one in Canada that you can buy on a platform like E-Trade. I'm not sure in Canada what they use, and the commissions are almost null. So own some in an ETF. I don't recommend IBIT because they're the biggest, and that's BlackRock. I recommend ARK Invest, which is ARKB in the US, ARKB. So on E-Trade, you can buy at such small commission amounts, less than 1%, less than 0.5%, you can buy and sell all stocks, not just the ETFs. So own some Bitcoin. I'm not telling you what to do, but we own some Bitcoin in the ETF ARKB. We also own the Bitcoin company Strategies, formerly known as MicroStrategies, and that's MSTR. And we also own some actual Bitcoin in Coinbase, and we also have taken some off of Coinbase and own it in a hardware wallet, which you can take anywhere in the world legally, even more than $10,000 worth, because it's not actually on the wallet. The keys are in the wallet. So it's like you can't take your Lamborghini from here to Malaysia, but, without paying some taxes and duties and declaring it, of course. But you can take the keys to the Lamborghini, and that's what you're doing when you're taking a hardware wallet out of the country with more than $10,000. You don't even have to declare it. At least that's the current rules. That could change. But let's get back on to topic here. And we have this video linked in the description, and we're going to show part of it here. Mark Moss explaining in the U.S. government how mainstream Bitcoin is. And this is what people need to wake up to, how big it is already. People think it's what it was a year ago. It just isn't. It is becoming the new money, the new currency. Now, we don't spend it as currency. The way we spend it is we keep it in our Bitcoin ETF on E-Trade, and we have an E-Trade debit card, or it's a Visa debit card or MasterCard. And whatever cash you have available in that account, so you could have just sold some Bitcoin, and now you want to spend it on your Visa debit card. Same thing in Coinbase. You can actually, in Coinbase, say what asset you would like to spend. It could be Bitcoin or any of the other altcoins like Ethereum, Solana. You choose which one you're spending when you use your Visa debit card right on the the Coinbase app on your cell phone. So spending is very easy when you have Bitcoin, and you can actually get a loan against your Bitcoin, which is part of what this Mark Moss video is about. But the main reason I'm showing this Mark Moss video is to show you how mainstream it is. People need to wake up to this fact that it's real. It's going to become $300 trillion perhaps in the next 10 years, according to many analysts. So, and $300 trillion is 1/3 of all the wealth in the world stored in Bitcoin. There's stories of people selling their real estate and having Bitcoin. And in fact, I personally don't want to buy any more real estate because I want my money sitting in Bitcoin and MicroStrategies over the next years. I'm an older person, so I'd like to see some increased wealth from this over the next year, 2, 3 years. And then once you have a little wealth in Bitcoin, you don't even have to sell it. You can still wait for it to increase in value while you take a loan out against it to maybe buy a house or something. But not for an investment, just buy a house. At least this is my thought for my future. I will only buy real estate and houses, not for an investment, but just for my own use. So let's get back to our outline here. So again, the main thing is I want people to wake up and realize what I realize, and that is Bitcoin and some of the altcoins are the best place for your money right now. Don't go heavy into altcoins. Don't have any more than, maybe 5 to 10% of your portfolio in the majors like Solana and Avalanche and Ethereum and so on. And you also have to understand the President of the United States owns a lot of Bitcoin and Ethereum and others, and who knows, and so do most of the cabinet. I'm not saying I'm pro-Trump. In fact, I'm rather anti-Trump. But for this particular reason, I think it will be good for Bitcoin and other cryptocurrencies. So let's go ahead and show the video.
Yes, you read that right. One man inside the U.S. government could be setting up the biggest Bitcoin pump in history. And this isn't clickbait. It's bigger than most people realize. I'm talking about the U.S. Commerce Secretary, Howard Lutnick. I'm talking about his web of connections that puts him right in the middle of a shadow network of whales holding nearly 600,000 Bitcoin. So why is someone with that much power building a $2 billion Bitcoin machine? And what does Tether have to do with all of this? And is the US government actually planning a sovereign wealth fund to back all of this up? Now, real quick on Mark Moss, I've sold multiple tech companies, invested through every boom and bust market for the last 2 decades, and today I'm a partner at a top Bitcoin venture capital fund. I advise public tech companies, and I also publish the Quantum Wave Investment Report, where I help investors profit from the biggest shifts in technology and money before the rest of the world wakes up. In this video, I'm going to break down exactly how Lutnick's strategy works, the $2 billion Bitcoin playbook that's unfolding right now, how it ties into 2 potential US Bitcoin programs, yes, government-backed programs, and why this could ignite the most aggressive Bitcoin bull run that we've ever seen. Trust me, this rabbit hole goes deep. So let's go. All right, so let's jump right into this. I'm gonna use my whiteboard here on my computer to try to map all this out for you, draw it out for you. Okay, so at the center of all this, we have one man working inside the government, and that is Howard Lutnick. Now, most people don't know who he is, but if you do know, you probably know he's the CEO of Cantor Fitzgerald. It's an old school Wall Street institution. But what they don't know is that he's also the current U.S. Commerce Secretary, meaning he's not just playing the game. He's not just in Wall Street trying to play along. He's actually in the U.S. government writing the rules. So that's Howard Lutnick. Now, his company is Cantor Fitzgerald. So let's bring this over. As I said, this is an old school Wall Street firm. And Cantor Fitzgerald quietly announced a new Bitcoin financing business. So what they want to do is they want to provide financing or liquidity in the Bitcoin space, specifically for borrowing against your Bitcoin. So they have a $2 billion fund that they've set up to finance people that want to borrow against their Bitcoin, which is great because, as I always say all the time, don't sell your Bitcoin, borrow against it. And that's exactly what they're doing. They've announced they have $2 billion of liquidity for Bitcoin, and let's go ahead and bring Bitcoin over so we have this on our game board as well. So here we have Lutnick, the CEO of Cantor Fitzgerald, bringing in $2 billion of new liquidity entering the system without triggering any supply-demand metrics, and then we have Bitcoin right here. So we're starting to see how this is shaping up. Now, as I said, Lutnick is in the government. Now, before he was just part of Wall Street, but now he's part of Wall Street and he's in the government, and he's writing the policy in order to do this. It's a book right out of Wall Street's financial engineering playbook. By the way, Bitcoin 2025 is coming up in Las Vegas here. I'm going to be there speaking. Come hang out. I'll put a link down below if you want to save some money on tickets and come hang out with me. You never know who's going to be there. Well, I'll be there. Okay, so now here's where it starts getting interesting. Now, Cantor Fitzgerald is an old school Wall Street investment firm. They've invested into many things, like, for example, over here, a very controversial company you might have heard quite a bit about, Tether. Now, Tether is a US dollar stablecoin. It's the oldest US dollar stablecoin, and it's been rumored for years and years and years and years and years to be behind Bitcoin pumping and all of that. I've never believed any of that. That's a whole nother subject. If I'm going to make a video about that, let me know in the comments down below. But Tether is the largest US dollar stablecoin company, and they hold over 83,000 Bitcoin. Now, who owns a big piece of them? Well, that would be, of course, Cantor Fitzgerald. Here we have over here, Cantor Fitzgerald owning about 5% of Tether. So Lutnick owns Cantor Fitzgerald, the CEO. They have now launched Bitcoin products, and they also own 5% of Tether over here. Okay, so we're starting to see how this whole thing shapes out. Now, why would this legacy Wall Street firm buy into the biggest stablecoin printer in the entire world? Well, probably because they know exactly where this is headed. All right, now another big investment that Cantor Fitzgerald has made is in this company, Strategy. You might have heard of them, formerly MicroStrategy. They've gone ahead and changed their name because they're all in Bitcoin now. Now, at this point, we know that Cantor Fitzgerald took a massive investment into Strategy. We don't know exactly how much ownership, about $1 billion just in Q4 of 2024, so very recent. So if you think Strategy is not a good play, well, you might want to go talk to Lutnick because he just put $1 billion in last quarter. He obviously understands something about strategy that we don't. So now we have Lutnick inside the U.S. government, CEO of Cantor Fitzgerald, making massive investments, $1 billion investment in strategy, $600 million investment into Tether, because they know exactly what's going on. But here's where things even get more shocking. As Commerce Secretary, Lutnick is working with the Treasury and the White House economic advisors to build not one, but two government-level Bitcoin programs. First of all, they are building a U.S. sovereign wealth fund, of which potentially Lutnick will be in charge of. So Lutnick now will be directing the U.S. government to be investing money as part of a U.S. sovereign wealth fund. Now, what do you think that Lutnick might advise the U.S. sovereign wealth fund to buy? Well, if you're looking at this web, you might think Bitcoin, and you'd probably be right. The other plan that the government has put together is a U.S. strategic Bitcoin reserve. And of course, what would they be buying specifically? Well, it says it right in the name, and that would be Bitcoin as well. So now we have Lutnick CEO of Cantor Fitzgerald, making billion-dollar investments into strategy and into Tether, and as well as creating a $2 billion product around Bitcoin. At the same time, working inside the government to get the government to buy Bitcoin for both the U.S. Sovereign Wealth Fund and a strategic Bitcoin reserve. Now, what would the goal of all this be? Well, of course, if you can get the government to make it budget neutral, meaning that they don't spend any more money from taxes, then the direct cost to the public is none. But let's be real here. That's government code for financial engineering. But what do we really get here? Well, we get a man with power in both government and finance. We get a $1 trillion firm issuing Bitcoin-backed leverage. We get two of the biggest whales in crypto standing behind it. And we have a government quietly positioning itself to become Bitcoin's biggest holder. Now, look, this isn't some dream. This isn't some fragmented movement. This is a Bitcoin flywheel machine, a feedback loop machine, if you will. So how does this machine actually work, besides obviously putting all these pieces together? Well, what happens is, number one, is we get a capital injection into Cantor's play. So by Cantor Fitzgerald working with Wall Street and allowing Wall Street to bring that liquidity into the market without having to sell their Bitcoin, we have all this new capital entering the market. Now, all that new capital entering the market boosts their buying power without increasing the supply. So if we can do that without increasing the supply, that pushes the price up. That puts upward pressure on the price. But that's just the beginning. Step number two is then the market activity starts to surge. So all that fresh leverage, all that demand starts flooding in. Now we have traders, we have funds, we have whales starting to use borrowed capital to accumulate even more Bitcoin. Because, of course, they're all expecting the price to rise. Now, this increased buying activity pushes prices higher, just like we saw during previous bull runs, except for this time, the liquidity is coordinated from the top. Okay, the third part, step three, is we have major stakeholders starting to profit. And so as Bitcoin starts going up, we have companies here like Strategy holding 500,000 Bitcoin now. We have companies like Tether owning 84,000 Bitcoin, seeing the value of their holdings explode. Imagine as Bitcoin goes from 120, 150, 200, and MicroStrategy or now Strategy owns 500,000 of them. Now remember, as the value of their holdings goes up, so does their equity. And Cantor Fitzgerald owns both. They own Bitcoin and they own the company's equity. And so as the company's equity and their valuation goes up, then Cantor Fitzgerald gets, shall we say, a double dip. Now, step number four is institutional endorsement. So here's where it starts getting really interesting. You see, when the government, through the U.S. Sovereign Wealth Fund and the U.S. Bitcoin Strategic Reserve, as the government adoption enters the cycle through two potential moves, through this budget neutral strategy, meaning they're just reallocating money. But what it does is it creates this massive buy side demand. And more importantly, what it does is it signals Bitcoin is now a strategic national asset. What does that mean? Well, basically, when the U.S. signals full institutional backing of Bitcoin, it's not just the whales piling in anymore. Now it's pensions, it's endowments, it's corporations, it's other nations. And that leads us to step number 5, which of course is institutional FOMO. So we have now Wall Street, let's just bring them in here, and let's put them at the middle. Now we have institutional FOMO. Now we have created a system that allows them to be okay putting money in. With the government backing of this, they start piling in, which then continues to feed the flywheel. They buy more, they tap into Fitzgerald's debt. They get the debt, they bring more liquidity to market. The buying pushes the price up without bringing new supply to market, which then brings the valuation of Bitcoin up. Then companies like MicroStrategy or Strategy and Tether see the valuation of their holdings go up as well as their stock go up at the same time, and we have a perfect flywheel. The momentum attracts capital. The capital means more demand means more leverage equals higher prices, and the cycle spins again and again. This is the flywheel going round and round and round. And the faster it spins, the faster it goes up. No, this isn't a hype cycle, right? This is a coordinated system of leverage. A coordinated system of leverage, legitimacy, and liquidity. That's why I'm calling this a Bitcoin flywheel machine, and it's already in motion. Now, let's talk about what this means for you. Because if you're holding Bitcoin or you're thinking about buying Bitcoin, this changes everything, right? This isn't retail FOMO. This isn't another hype wave. This is state level game theory. This is financial infrastructure being built under your feet. Now, when governments and private sectors start to coordinate like this, they're not speculating, okay? That's what you and I did in the first phase. What they're doing is positioning. Now, this is why I always show you this chart, let me pull it up here, of the 50-year cycle. So this 50-year cycle I reference all the time is our blueprint to understanding this. So in this 50-year, what I call a quantum wave investment cycle, we have 4 distinct phases. We can see in phase number 1, which we've been in, this first 10 years is what we call the eruption phase. And this is where retail money rushes in. This would be from 2010 to 2020. Then from 2020 to 2030, we have what's called the frenzy phase. Now you can see from this green arrow, this is where we're at right here. It's important to understand this. Now, the reason why it's important to understand this is because these 4 distinct phases give us this blueprint, this roadmap of where we're at. If we look at it from another way, we can see this first part right here, again, was the retail eruption phase. So this is where you and I bought a bunch. We got to front run the governments. We saw the altcoin explosion. But right now, from 2020 to 2030, right in this big part of the move here is the institutional frenzy phase. This is where institutions, where the Wall Street institutions, where the governments, the sovereigns start to frenzy in. This is where the big money is made. And if you understand the playbook, you know how to invest through it. Now, this kind of coordinated leverage and demand, it doesn't lead to 20% gains. It leads to multiples. It leads to a full-blown Bitcoin supply shock in the middle of an adoption wave with government signaling right behind it. Now, that's when you stop measuring growth in percentages. You start thinking about it in exponentials. It also means you have to stop investing in the rear view mirror. That means you have to stop thinking about the past. You have to stop thinking about how expensive things are based off of the past. So, yeah, but Bitcoin used to be 10 cents and $10 and $100 and $1,000. And yeah, that's in the past. What we want to be doing is investing in the windshield. We want to be thinking about the future, thinking about things where things are going. And by understanding the cycles, you can follow the exact same playbook. Now, if you want to see me break down the entire playbook and show you where I think Bitcoin is in 2030, 2040, and 2050, and give you all the math to back it up, then you might want to go watch this video right here. But here's the thing. Either way, I hope you realize what's happening here. Howard Lutnick's plan isn't some fantasy. It's real. It's unfolding right now. And it could mark the beginning of the next generational wealth transfer for those that are paying attention. Let me know what you think in the comments down below. Thumbs up if you like it. Otherwise, that's what I got. To your success. I'm out.
So to reiterate, Bitcoin is mainstream and it's only going to get bigger and bigger in market cap and usage. Don't wait around till you can buy a pizza with Bitcoin directly. You can already buy a pizza with your Bitcoin or any other cryptocurrency on your debit card Visa from Coinbase or from your ETF on E-Trade. That's in the US. I'm not sure in Canada. And if anyone watching from Canada knows the answers to those questions, which are what do you use in Canada and what the actual ETF name and identifier is, please give us a comment. Excuse the lack of real good flow here. I'm just speaking conversationally. And main thing is we're buying Bitcoin as much as we can, and MicroStrategies and certain cryptos, or I should say altcoins such as Solana, Cardano, Avalanche, and Chainlink. And there's a few we need to buy also, like not Moderna. What is it? Anyway, we need to do a video on this. But there's plenty of stuff on YouTube about the main altcoins. I would stay in the top 10 or top 20. Don't go much further. If you're going to do a gamble, keep the amount small. If you're going into, the altcoins that are well below the top 20 in market cap. But bottom line, you need to have Bitcoin. Well, I can't tell you, this is not financial advice. But we feel an urgency to own as much Bitcoin and MicroStrategies as possible, but stay diversified. And we're going to try and keep it to where we don't have any more than 50% in Bitcoin, and then maybe 5% of that, maybe 10% in the top 10 altcoins. I'm going to look over my outline here to see what else I need to cover. By the way, we're going to have a video we just made using nvideo.com AI video curator, just kind of summarizing our outline here. But I'm going to see if there's anything I need to emphasize here. We talked about game theory. We talked about emphasizing how mainstream Bitcoin is, and that people don't realize how mainstream it is. And the volatility, by the way, will decrease the bigger the market cap becomes over time. Reiterate that El Salvador is already adopted it. I think Bhutan as well, through Bitcoin mining. That's another thing we haven't talked about. You might consider just buying a Bitcoin miner if you can put it into a place with low electricity costs. I have a few videos on that on this channel. Global adoption trends. Countries such as China, Saudi Arabia, and the UAE are buying Bitcoin, or maybe seriously considering it. Same with companies like Microsoft and Apple. Reasons to buy Bitcoin. Let's reiterate this. Short-term gains. Bitcoin potential for rapid value appreciation due to increasing adoption and game theory dynamics. Long-term value. Bitcoin's position as the new gold, as noted by Larry Fink of BlackRock, offering a hedge against inflation and long-term wealth preservation. In other words, get your money out of the US dollar and get it into assets like gold and Bitcoin and silver. Gold and silver are just going to keep up with inflation, generally speaking, whereas Bitcoin will probably go up at least 40% every year instead of deflating by 5 to 10 to 20% a year like the US dollar and other fiat currencies. Bitcoin's price forecast. Okay, as we're filming right now, the price of Bitcoin is just under 87,000, and the top was 109,000. The estimates are that it could reach 500 to 700,000 per coin by mid to late 2028, with an accelerated institutional adoption. Bank America suggests Bitcoin could climb to 150,000 by early 2027. Very conservative. Fidelity projects Bitcoin reaching 180,000 by December 2030. That's a really, really low conservative estimate. ARK Invest, that's Kathy Wood, forecasts Bitcoin hitting 1 million by early 2030s if current trends persist. Tom Lee predicts Bitcoin may surpass 250 by March 2027 based on adoption and demand projections. Simon Mao of Jan 3, he predicts it could actually hit 1 million before the end of the year in these Omega candles and God candles, which means it can go up 10,000, 100,000 overnight. And you just don't want to be out of Bitcoin. It is too dangerous to be out of Bitcoin considering these God candles. It could reach 1 million and then retract right away to 500,000, by the end of the year, is basically what he's saying. And that's a result of the shortage of Bitcoin on the market. As countries start to adopt, we'll have shortages, and then there's multiplier effects. You don't just divide up the price will go up more than the amount of buying. That's called the multiplier effect. Plenty of videos on YouTube about that. Bitcoin as a savings account. View Bitcoin as a modern savings account that preserves value over time. Explain how Bitcoin... Explain how Bitcoin's short-term and long-term value, its growing adoption by nations and corporations, and its transformative potential in the global economy makes us want to buy as much as possible as soon as possible. Encourage viewers to see Bitcoin as a strategic investment in a rapidly evolving financial environment. I'm just checking my outline here. But main thing, people, wake up, watch all the information on YouTube. You can turn on CNBC, Bloomberg, and every hour on Yahoo, and every hour they have an update.
Welcome to our channel. Today, we'll embark on an enlightening journey into the world of Bitcoin and its transformative potential in the global financial landscape. Living near the Canadian border, I often engage in conversations with both Americans and Canadians. One common theme I've noticed is the misunderstanding of Bitcoin's mainstream acceptance in today's financial world. Many still view Bitcoin as a relic of the past, but in reality, it is more relevant than ever. In fact, Bitcoin is on track to potentially represent 30% of all global money in circulation within the next 10 years, or even less. This could mean a staggering market cap of $300 trillion, dwarfing gold's current market cap of around $12 trillion. Imagine Bitcoin representing 1/3 of the total global wealth, estimated to be around $900 trillion. This increasing adoption by countries, corporations, and individuals through mechanisms like 401k accounts in the US and RRSP accounts in Canada is a testament to its growing importance. Now is the time to act, not just as an investment, but to position yourself for a transition to a new monetary system. Bitcoin serves as a superior alternative to fiat currencies like the US dollar, which consistently lose spending power due to inflation. Holding Bitcoin is like having a savings account that steadily gains spending power, unlike fiat currencies that diminish in value. Stay tuned as we delve deeper into Bitcoin CME gaps and their implications for traders. And don't forget to check out the video featuring Mark Moss for more insights, linked in the description below. Let's get started. CME gaps for Bitcoin price are a well-known phenomenon in cryptocurrency trading, frequently observed by traders due to their high likelihood of influencing price movement. These gaps occur on the Chicago Mercantile Exchange, which is the leading venue for Bitcoin futures trading. Since the CME operates during standard market hours and closes for weekends and holidays, gaps form on its futures chart when the exchange reopens and the price has shifted during its downtime. Please consider subscribing to American Northwest magazine. Our subscribers mean the world to us, and please click on the thumbs up icon to help our channel grow and finally become monetized. Bitcoin CME gaps result from the following factors. 1. Continuous trading on other platforms. Bitcoin trades 24/7 on global cryptocurrency exchanges, even when CME is closed. This continuous trading often results in price changes over the weekend or holidays, leading to gaps when CME futures resume trading on Monday mornings. 2. Market psychology. Awareness of these gaps influences trader behavior. Many market participants and algorithms actively anticipate price movements to fill the gaps, creating a self-fulfilling dynamic that reinforces the phenomenon. Historically, Bitcoin CME gaps have been filled approximately 90% of the time. However, prices do not always return to the bottom of the gap or fill it entirely. Partial fills or movements within the range of the gap are common occurrences. Factors that impact the filling of gaps include liquidity. Gaps are often areas of increased liquidity, making them attractive targets for traders. Market trends, whether the market is bullish, bearish, or range-bound, can influence the timing and extent of gap filling. External events, macro-level factors such as regulatory developments or major economic events, can delay or accelerate gap filling. Bitcoin CME gaps are closely monitored by traders for potential opportunities. Here are a few ways traders use these gaps. Support and resistance levels. Gaps often act as significant areas where the price consolidates, creating potential entry or exit points. Market corrections. Gaps can signal retracement levels during price trends, short-term speculation. Day traders and scalpers may use gaps to predict immediate price movements. It's important to approach CME gap trading cautiously, as not all gaps are filled instantly or completely. Reliable trading strategies should incorporate broader market analysis and risk management. Specific gaps identified in Bitcoin's price range include $78,000 to $80,700 acting as a support range. This gap has drawn attention from traders monitoring price retracement. $82,245 to $87,000. This higher-level gap occurred during the most recent weekend, March 22nd to 24th, 2025. It remains a point of interest for potential price movement. To pinpoint the exact weekends when gaps occurred, traders often analyze historical CME futures charts. These charts display weekly closing and opening prices, making it easier to identify when and where the gaps formed. The phenomenon of gap filling is partly driven by market psychology. Traders and algorithms are aware of the existence of gaps and tend to act on this information, creating a cycle of predictable price movement. Additionally, gaps are areas of increased liquidity which naturally attract price activity. CME gaps, which are price gaps that occur in futures trading on the Chicago Mercantile Exchange, CME, are not exclusive to cryptocurrencies like Bitcoin. They can also appear in traditional stock market futures such as S&P 500 or Dow Jones futures. These gaps typically occur when the market closes for the weekend or holidays, and significant price movements happen during the downtime. When the market reopens, the price may gap up or down, leaving a blank space on the chart. However, in the traditional stock market itself, not futures, gaps can occur due to after-hours trading or major news events that cause the opening price to differ significantly from the previous day's closing price. So while CME gaps are a feature of futures trading, the concept of price gaps is common across various financial markets. In traditional markets, the percentage of gap fills can vary widely depending on the asset and market conditions. For example, some studies suggest that gaps in equity markets are filled around 70 to 80% of the time, while Bitcoin CME gaps are often filled at an even higher rate, sometimes exceeding 90%. Thank you for watching. Please consider subscribing and clicking on the thumbs up icon to help our channel grow and finally become monetized. We strive to please our subscribers with better and better content each time we produce a video. Please comment on where you're watching from and what kind of videos you'd like to see from us in the future.